Good morning, folks, and welcome to a quick update with regard to SMCI, Supermicrocomputer Incorporated, NASDAQ stock. It is the 16th of February at around 5:19 a.m. Eastern Standard Time. So what we're going to talk about today are the technicals of Supermicrocomputer. I've been on Twitter, I've been on StockTwits, and there's a lot of bullish optimism about SMCI, and all I'm going to say is that this is not going to end well. So we'll walk through the technical analysis of the chart. We'll talk about what's driving this stock up higher. And we'll talk about, believe it or not, resistance. You're going to ask, how the heck can there be resistance on a stock that's at all-time record highs? We'll talk about it, so stick around. So brief overview of SMCI, RSI going into the new trading day is at 96.79. That's as of the close of the 15th of February. Nosebleed overbought levels. Rarely is this ever seen. We have been in a rising uptrend channel. We blew through the upper band of that rising uptrend channel yesterday. Volume, historical volume here. This is probably, I haven't gone back all throughout the company's history, but I'm pretty confident that's probably the highest volume bar, certainly of the year and probably in the history of the company. And what that could be is a capitulation blow off top on SMCI. ADX, this black line here, ADX black I like to call it, or a signal line, is at 70. To put that into context, actually it's just below 70, 69.56. We will open up with this above 70 if the pre-market activity is any indicator. Any read above 70 is really nosebleed territory, very similar to the RSI. Now, I'm saying nosebleed off the cuff here, and I'm going to put into context why it could stay at nosebleed territory for a bit longer than a mega cap stock. Bear with me for a moment. Now, looking at the weekly chart, we have RSI weekly time frame at 92.55. This time last week, that's where this RSI was on a daily time frame. And on the week, SMCI is up 35.62%. Seems more, to be honest with you. In red, you'll see here that I have the Bollinger Bands. This is not your out-of-the-box Bollinger Band. This is a 3 standard deviation Bollinger Band. The normal out-of-the-box Bollinger Band is a 2 standard. I have that here in green. We blew through that well over a month ago, and we've been above the 3 standard deviation Bollinger Band for 6 weeks now. This is the 6th week, assuming that we close up on the day. Now, to make this even wilder, I'm going to change that 3 standard to a 4 standard deviation Bollinger Band. And we're right at it. And we've been at it week after week. This is really unprecedented in terms of quote-unquote overbought conditions. Now, going into a 4-hour view, it gets even wilder. 4-hour view, RSI 92.22 with ADX now at nearly 80. I don't think I've ever seen it at 80 before, but this truly is a really overbought stock, or what I like to call in the options industry an outlier. And so the question is, what's driving this rally up higher? It's fairly easy, and you can see the manipulation, and I'll go over how they're manipulating it in a moment, because the question has been asked on Twitter primarily. What's driving this stock higher? Is it retail or is it institutional? And it's a mixture of both, as it usually is. So the driver of the share price moving higher is that you have a float of only 47.53 million shares. That's not a lot of shares. And the size of the float influences the beta. This is a 5-month beta. I'm sure this is measurably higher now. This is a 5-month average, rolling moving average. So this is probably above 2 now in terms of beta. For those not familiar with what beta is, that's a measure of volatility. So this technical here, the fact that you have so few shares that are traded openly on the market, allows for serious distortions in the share price. Now, what else is driving the share price up higher? Well, when you take a look at The option flow, this is as of yesterday. The options market's not open at current. You can see that the market is not open. This is as of Thursday today, so this is yesterday's data. In orange, you have call option flow. In white, you have price. In blue, you have put options and their flow. And you can see that the trend is much higher for call buyers and it's flatlined for put buyers. Now, what does this mean? What it means is that if you're the market maker and you're maintaining a book on SMCI, if you're selling call options and not hedging your book, you're out of business. Would have been out of business weeks ago. So what they need to do to remain in business and not to get run over is they need to go into the open market and they need to buy the common stock. And that hedges their book and keeps them from getting run over by a steamroller, thus adding to the volatility of an already small float, as I mentioned before. Now, what are the institutions doing to exploit this? Very, very simple. Let's go to, and I'm going to go to a moment, a chart in the past that we've seen this before, and we're going to talk about resistance, so stick around. So what the market makers have been doing, or the institutional players have been doing, let's go to a 15-minute chart, and this is Thinkorswim. So what you're looking at here is the after-hours trade here, 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 and then after you get this dash line, you get the pre-market trade, which opens up at 4 a.m. If you're an institutional investor, you'll know that it's very, very difficult, if not impossible, to get a trade off in the pre-market prior to 7 a.m. Eastern Standard Time. So you may be asking yourself, hey, wait a minute, then why is it, I'm looking at this chart here, why is it when the market opens up at 4 a.m. that we have activity in the marketplace? It's simple, because the institutions have access to the stock before you do, before I do. So the game they've been playing, let's go back a few days here. Here, we'll go back to, what day is this? This is the 13th. All right, so they close out the stock on the 13th. What do they do in the after-hours session? They bid it up. And they don't bid it up a little. They bid it up a lot. Then it opens up at 4 a.m. And you could argue back here, before they go to 4 a.m., you could argue back here, this is a retail trader. They have access to the after-hours trade until 8 p.m. Eastern Standard Time. All right, fine. But when you take a look at this action here, this is undeniable. This is a footprint. And that the institutions are bidding the market, or bidding SMCI up higher in the pre-market. What does that do? It gets traders excited that they're going to miss the boat. They need to buy the stock at the open. They did that on the 13th into the 14th. Fast forward to the 14th here. They did the same thing after hours. The 15th, pre-market, same thing. Now let's go to present day. What do they do after hours? We closed out the regular hours session at $1,004. We closed out the extended hours trading at, I think it's 103.2. And now in the pre-market, they brought it up as high as 158. Now keep in mind, it is 5:34 a.m. Eastern Standard Time. So for retail traders, the markets are not open yet. So they're already doing what they've been doing the past few days. So how does this all end? Well, a couple of things to keep in mind. Today, being the 16th of February, is an options expiration day, a monthly options expiration day. Forget about the weeklies, monthly options expiration. You have a call wall at the 900 strike. We've already blown through that like a hot knife through butter. And a put wall, I believe down at around 850, in that neighborhood. As a matter of fact, it's over here. Put wall at 810. I stand corrected, 810. So a call wall at 900 and a put wall at 910. So I think that it is possible that we do retrace as soon as today back down to that 900 level on the share price, despite the fact, and this is kind of a bold statement because we're up significantly in the pre-market session. I think we could retrace back down to a 900 level, at least intraday, on the share price. Now, why would I be confident in making that statement and there's not a lot of upside in front of us? It's pretty simple. What I did last night, and I posted this on Twitter and on Stock Twitch, is that on a weekly time frame, and if you're going to do this at home, you need to use a logarithmic chart. I extrapolated out on a weekly time frame, where might we see resistance on SMCI. So I extrapolated out from the two prior peaks, or three prior peaks, and I came out with a figure at around 964. You got to give me a little bit of room here. This is a very long dated chart. I'm doing this manually, so give or take 20, 30 bucks on either side. Keep in mind, we're dealing with $1,000 stock now. So when you take a look at Thinkorswim and we go to a weekly chart, I did the same here. I connected prior points. The one in purple, that's the one I just showed you on the other chart. And this is why I say you got to give me a little bit of room. This chart here shows that we have a little bit more upside potential on a weekly chart at around $1,006.35 per share. Now, using an even longer dated, extrapolated out upper band of resistance, well, we already blew through it. And that was around $8.34 per share. So we're doing an average here of the two, and I'm coming up at around $900 per share. Again, a little bit of latitude. I'm not making a dead set call. I wouldn't be the least bit surprised to see this close down below 908 on the day. That being said, it's a low float stock, and the street just may want to keep this stock in play. Now, looking at a 15-minute chart to see where we are relative to those two upper bands of resistance, well, we're well above them. So how I think this ends is that, the market participants, the institutions, they're going to do what they do, and that is manipulate the stock after hours, pre-market. What they have made the average investor accustomed to is that at the open, the shares get bid up, not by a little bit, but by a lot of bit. So it emboldens them to go out and buy call options, thus driving up the stock price because the market makers need to go in there and hedge their book. Rinse, wash, repeat, day after day, until such time as those institutions decide we're not going to be backstopping the market anymore in SMCI. And rather than supporting the stock at the open, they're going to take advantage of the liquidity that the retail investor is providing, and they're going to sell into it. And it is going to be brutal. This is all about conditioning of the retail investor. Now, have we seen this before? Absolutely. Everybody remembers the stock, GameStop, and its giant run back in 2021. At that point in time, you had RSI, which reached a peak at around 99.42. We could possibly tap that on SMCI today. But then, back in 2021, post-peak on RSI, the floodgates of hell opened up on GameStop, and it has never fully recovered. Now, this is a different story. It was a meme stock. The fundamentals were and are horrible. And the reason why this tanked is because it was a catalyst, and I believe it was Robinhood that wouldn't allow the purchase of any more shares of GameStop, only sales, thus resulting in this sell-off. Now, what could be the catalyst here today? Well, if SMCI announces a secondary offering, which in and of itself is not bad, but if they dilute the shareholders, that's a catalyst. Any number of things could be out there, downgrades, what have you. So as I see all these posts on social media that SMCI can't go down, folks, it can go down. The comments I see on social media are very similar to the comments I saw back here on GameStop. Diamond hands, YOLO, blah, 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 blah. It didn't end well. So that's what's happening here. Enjoy the ride higher, use a tight stop, and everybody have an awesome weekend. Be well.